the buildings are aging. Lots of those 1960s buildings are now clicking over into the 50-plus age period where they really need a renovation. Capital funding, which was growing, has started to drop off sharply. We're seeing increasing density in some campuses, and as a result, what's happening to the backlog. And where our data shows that the backlog of need per square foot basis, this is amount of dollars per square foot, it has gone from about $75 a square foot in 2007 to over $85 a square foot in 2011. That's an increase of about 14%. So it's tracking very similar. If you remember back to the first slide, the percentage of increase of the space over 50 years old, the backlog is going up, rising at about that same rate. And that's about $10 a square foot. Now, you know, if there was a lot of capital money out there and the buildings weren't aging, you might argue, well, this will eventually get around to taking care of this. But this is beginning to worry us as we look at our campuses. Another $10 a square foot would get us up to about $95 a square foot if you get down, you know, track this out maybe 5 years. And that begins to get dangerously, it could be a dangerous situation for us. When we take a look at campuses that have over $100 a square foot, we find that they don't look as good. They've got a lot more emergencies. They are able to do less planned and preventive maintenance. They have more buildings that are in failure situations, and as a result, they have more crisis work orders, and it basically costs them more to operate those campuses. So a trend that we will watch. We're not seeing any reversal of this trend so far. It's been steadily climbing, and that's one that we're going to monitor and be very, very attentive to. When we took a look at different types of facilities and look at the backlog, we found that all were increasing at about the same rate, but research institutions were going at a little bit, almost double that rate, about 14% increase. They're driving a lot of what we're seeing in our overall numbers. Those research institutions are younger, as you can see, so they've got a little bit less, started with a little bit less backlog, but they're seeing an increase now from about $65 to about $75 a square foot. So their backlog's going up the most, but everybody's backlog is going up. One of the other things I want to see is how is this affecting the balance sheet? If your assets are deteriorating and are less valuable and your liabilities are going up because you've got to borrow to fix those buildings, what's the difference? What's happening in terms of public and private? And you can see, of course, some of the impact of the recession, particularly in private on the asset side. Some of that's loss of endowment in 2009, a little bit coming back in 2010. We don't have all the 2011 numbers in from this, so we don't have those data. But you can see that what's really interesting here is that as liabilities as a percent to assets, the public institutions have quite a difference. That's 45% liabilities to assets ratio versus the private institutions, 32%. It tells us that the public institutions are getting through the recession by borrowing. They've basically gone out and bonded and are borrowing money in order to keep going, and at a rate that's significantly higher than putting their liabilities at a percentage that's significantly higher